Hey there, my name is Geri, and I'm the host of Exponential Customer Success Every Day. I am here to talk to folks that are impacted by or impacting the markets that we're in today to learn, to grow, and to also share that knowledge with others. So whether you're a founder, a customer success professional, or just someone that's interested in what's going on in the market today, I hope you'll tune in. Welcome back to another episode of Exponential Customer Success. I'm really excited to launch our first episode of 2025, and it's not too late in the year, so we're doing it in a timely fashion. But also, my guests today are people that I've actually got to know in a very much more intimate sort of way, I think, than others. And they are Geri and Mirit, and I'm going to ask you all both to introduce yourself in a moment here, but I met them both by being a member of cohort 7 of the Venture Cooperative that they run through Laconia. And I'm just going to do a little plug for that because as someone not in the world of venture per se, I think it was a really, truly educational and just inspiring experience. I think also it also demystified a little bit of I don't know, what people think of venture, right? They think it's very glamorous. And I think you really just like tell the truth. And I really love that. So for those people interested, feel free to reach out for more information on that. But Geri and Mirit, thank you for joining me today. I had to do that little longer intro. Really excited to have you both here and would love to just start off with a little introduction from each of you. What's your story? Where did you come from? What brought you to the path that you're on working at Laconia? And I always like to ask any sort of fun facts or hobbies that you'd like to share. So we can start with you, Geri, because you're just on my top here.
Let's do it. Well, first of all, thank you for that wonderful introduction. This is like case in point for why we do the Venture Cooperative in the first place, because it provides that kind of transparency and those opportunities. And in some ways, you learn a lot of things you didn't know, but in other ways, hopefully a lot of people discover that there's really no magic or secret and you can just do things. So we hope that has been sort of an energizing and a liberating experience for anyone who's interested in the space. But to answer your question, I was born in Bulgaria. My parents moved us to New York when I was 2, so I'm taking you all the way back. I grew up in New York, went to NYU Stern for undergrad because I wanted to learn how to run a business. And then I found out that everyone who goes to NYU Stern goes there because they want to be an investment banker, which is great and fine, but I just realized I was in the wrong place. So I spent some time wandering around looking for all the entrepreneurial communities there. And then through a somewhat roundabout way, I found myself tapped into a couple of entrepreneurship and venture capital ecosystems. So I actually kicked off my venture capital career when I was abroad in Prague at a fund called Credo Ventures. Then I spent some time at a fund based out of Sofia called Launch Hub. And then when I went back to New York, I met our partners, Jeffrey and David at Laconia, spent some time at Techstars, and then really have spent the last 8 years or so building a venture firm from the ground up. So I thought about, what should I do with my life? Do I want to invest or start a company? And then I thought, why not do the hardest thing possible and do both at the same time? So it's been a lot of fun to get here. Fun fact is that actually a year and a half ago, I moved from New York to Zurich. I speak 3 languages, and in Switzerland, people speak 3, sometimes 4 languages, and there's no overlap between my languages and theirs. So I'm once again on a language learning journey. So if anyone speaks German, please help me.
Oh, that is so interesting to note that you don't have overlap too. Well, no, what a wonderful journey, and thanks for sharing a little bit of the details. And also, I think I knew it that you're, kind of partially based in Zurich, but that's like really cool. My brother is overseas in London, and I'm always like, someday I'm gonna get myself to Europe to live for a little while. So let's see.
It is very fun to be able to straddle both worlds.
Yeah.
Oh yeah. Awesome. Okay, well, Mirit, let's hear about you, please.
Oh, again, thank you so much for having me, and I'm excited to be here, and it's excited that it's called customer success, which I know we'll get to later. So I'm Mirit. I'm originally from Israel. That's where I was born and raised. And I actually started my career going into law school, thinking that I am actually going to be a judge and change the world and solve kind of justice issues. But I went to Tel Aviv University and ended up actually learning corporate law and antitrust. So I actually, luckily, straight out of university, was able to do a relocation with Thomson Reuters, which was a capital markets company I was working at the time, to manage the whole Israeli financial markets from London, straight out of university. So canceled my internship and flew all the way to London. Spent 6 years at Thomson Reuters there, did my MBA, and then fell in love with the world of startups. I realized that building ships while flying them was exciting. And I was first in a fintech venture-backed startup, taking it from 1 million to 10 million ARR, which is like an exciting stage to be in, and then continued on to other startups in edtech and social impact, but really discovering the power of moving capital fast with less regulation than the capital markets, and at the speed of innovation. So that was really exciting. So I thought, what if we can use capital for other purposes? So I quit my job in London, moved to New York City, arriving 2 weeks before shelter in place has started. At perfect timing, but trying to discover, what does it mean moving capital towards things I care about. So I helped build 51 Unicorn, which was an investment club aimed at female retail investors investing in other female founders. Then helped build Seed Impact, which is a platform orchestrating investment opportunities between angel investors and social impact founders. And then did a fellowship in venture capital, saying, actually, why am I at the periphery of capital movements? I should just be within venture capital. And in that fellowship, Included VC, plug for Included VC, in that fellowship, I actually met Geri and Asked Me Anything and fell in love with her, like I know everyone in the Venture Cooperative did. And luckily for me, a year after that, I was able to join Laconia and never look back. And Laconia is a perfect combination of both my B2B SaaS operation background, but also like the intentionality, as hopefully you and everyone else in the Venture Cooperative have seen, around how we invest, who do we invest in, and kind of how do we do venture in a more intentional way. So very fortunate. That my fun fact.
Yeah, your fun fact. Okay, let's do that. Let's do your fun fact.
So my fun fact is related to my time at London. I had tea with the Queen. And
oh my.
By tea with the Queen, I mean once a year, the Queen gives the Commonwealth people who live in London an invitation to her gardens. It's not just me and her, it's her and hundreds of other people. My husband is from New Zealand. And somehow we got the raffle. We basically a lottery that you do. We got the raffle, and I have like a stamp. I still have like the invitation with the royal stamp arriving at my house, inviting my husband and I to the tea with the Queen. So that's my fun fact.
That is so cool. Oh my God, I just came from London.
I was in her presence.
In your presence.
Yes. The peasants, the real people actually get to meet her. Those that actually deserve to meet her actually met her, and she spoke to them. We were just there in the background, the peasants.
Oh no, I'm saying we are in the presence of someone who is in the presence of the Queen.
That's what I was thinking. Is like, we're like 1 degree now. We're 1 degree to the royal family. Okay, this is awesome. What a great connection. No, that is a very fun fact. I just came from London, and I mean, all the nostalgic vibes right now. So no, but you, like, your career is so interesting, and I think like you touch on something that is very near and dear to my heart. Actually, what I kind of do as a practitioner, which is that early stage journey, and like really helping founders when they really don't even know what they're doing, other than I'm building this thing and I know how to build this thing, and I need that kind of operational excellence. And so for me, in the world of customer success, as you guys know, it doesn't always happen early, right? A lot of founders in the early days, they're like, I want my first customer. I need my first customer. I'm like, great. What are you going to do on day one? What's going to happen? So that's where I share that passion with y'all. And I really loved the focus on seed and pre-seed, because honestly, my knowledge of venture grew probably more in the last year than ever before, where I didn't even know what pre-seed and seed was before that time. So in that vein, I'm going to ask you, Mirit, to share with us a little bit about Laconia investment, perspective, philosophy, as you might call it, or sort of what are you all focused on?
Great. So Laconia, we are an early stage firm based in New York City. We lead investments into pre-seed and seed founders who are building companies in the B2B space. Our investment thesis is B2B software companies that are revolutionizing the way business is done. So we're quite sector agnostic, but traditionally we have looked at vertical SaaS, retail and e-commerce enablement, fintech, and more we are excited in the healthcare space. We made 3 investments into that space, even within value-based care, which is a complex model within healthcare. But anything around the operations of how healthcare is being run and made. But we're sector agnostic and do look at across the board. We're looking into agriculture and farming and software for nitrogen usage. So very, very cool. We're currently investing out of our 3rd fund. It's a 20 million fund. We're highly concentrated. We're targeting 20 investments out of the fund. We've done 15 to date, so we'll have at least 6 more to go. Our check sizes ranges between 250 to $1 million, with a sweet spot of 250 to 750. We can lead, co-lead, or follow, and we're what we call high conviction, high touch. There's a high bar for us to invest because of our very concentrated investment thesis. But then once we do invest, there's 4 of us on the team, and we're quite hands-on with sales acceleration, operational execution, and capital strategy. So what are the milestones needed to achieve the next round of financing, and how do we work back from that? Of course, we can also stay out of the way for those who don't need us, but we're happy to offer that support in those early days.
I hope that they all need you guys, because I think that, when you get these opportunities to have like advisors, mentors, I mean, for everybody, even for individuals, it's so valuable, right? Okay, so Geri, you really worked on building Laconia from the ground up. Tell us about what that experience has been like in the past couple of years, with a lot of like market changes. Maybe what you built to start is a little bit different, or the way you think is a little bit different. If you could share a bit of insight on that, that would be great.
Definitely. When I first met Jeff and David, and when we started investing Fund 1 and really building out the investment strategy and philosophy, this was a decade ago now, and a very different capital environment, a very different stage of the market cycle. And people occasionally looked at us like we had 3 heads when we talked about things like unit economics and business fundamentals, and can we walk through your financial model, and what does break even look like for this business? And there was a period of time where it seemed like everything that we were talking about was just not at all aligned with the venture trajectory. So we've always had this focus on business fundamentals, unit economics, capital efficiency, and a lot of the elements that Mirit touched upon, right? How do you build a strong operational foundation? What do you need to put in place in order to demonstrate sales acceleration between seed and Series A? And what is the right capital strategy for your business? I think the biggest thing that has evolved over time, especially over the last few years, as the sentiment in the market has shifted, is that capital strategy has become more important than ever before, as some of these other elements have become more important. So, everyone listening to this knows we're no longer in a growth at all costs environment. We're no longer at a revenue doesn't matter, let alone profit environment. And at the same time, the outcomes are even more bifurcated. We're seeing consolidation of capital at the VC level at unprecedented levels across fewer funds and firms, which means your fundraising outcomes, right? Whether you're able to raise a Series A or not, is often quite a binary outcome. So, there's a range of outcomes that when you're starting a company, you can end up in. But I think founders have to decide earlier on what game they're playing. So we have companies in our portfolio that have raised 30, 40, $50 million before they started generating revenue. And that can completely be a viable strategy even now. And we have others that are profitable on just $2 to $3 million raised, generating tens of millions in annual revenue. But founders need to decide relatively early which game they're playing and plan accordingly, because it's very hard to make that shift when you're already in motion on a certain operating plan.
Well, that's really interesting. Okay, so you're saying, hey, you can decide your path. I kind of felt like it was maybe more cut and dried nowadays. Like you probably have to show some revenue generation, or at least a plan towards it, but you're saying like it's still happening that, there might not be real revenue coming in and people are getting funded. So, okay, that's interesting to know. Yeah.
Yeah, I think the reality is certain businesses just require more capital than others to reach critical mass. And whether you have a high cost of entry because you need regulatory approval or you need to build for a longer enterprise sales cycle, or you're in a very hot category where your competitors are raising tons of money and you need to be able to play offense. Um, there are a number of totally valid good reasons for why certain companies will need to raise more money than others, right? Like we're not living in a world where every business is going to be super capital efficient. It's just a matter of understanding what are the things that you need to demonstrate and what strategy do you need to have on the relationship building and on the fundraising in order to make that happen. For the businesses that don't need that and that can raise less and can validate revenue growth and high margins and a reasonable growth trajectory and a reasonable outcome even with that, that's totally fine too. But I don't think that we should universally be telling founders not to go for that bigger, faster trajectory if that's the right thing for the ultimate goal that they're trying to reach.
Oh, I love that. Okay, great insight. And now I'm definitely thinking of some good examples of like businesses that could, need a lot of capital just to even get off the ground. Okay, so for both of you, and feel free to choose however order. When you're working with founders and companies, what is the most important factor that you look for? Because again, in the pre-seed and seed, phase, and I've talked to other sort of VCs that are in that phase, you may not have as much information as you maybe hope to have every time, right? Just based on what they're really up to and how far they've gotten. So how do you judge, I guess, founders and companies if you had to, give us one or two of your top criteria?
Do you want me to
That's a tough
take
question.
it? So I think you're right, Pearl. This is there's not a lot to go by, and a lot of the time people say that pre-seed and seed, it's almost like a hiring decision because a lot is so much focused on the founder or the founding team if you have a team at that stage, and a lot of how we assess an opportunity relies on assessment of that team. So we will look at the founder themselves and do they have a unique market insight or what people like to call a founder market fit, right? Like, why are you solving this problem in this market right now? And we love to see those founders that bring in that founder market fit or unique market insight. Are they grounded in go to market? It's really hard to build a company and then go out and sell it in the B2B space. So do we think they're grounded in go to market? And even if they're a technical founder, do we think they're hired around them to be able to be grounded in go to market? Because often there's a team. And we look at their financial rigor and their operational rigor, and we try to uncover that throughout the investment process through various stages and questions and things that we go with them. And of course, you look at things like coachability and fit and the softer skill, but as a whole, it really does become kind of a hiring decision. Of course, over and above the team, we could love the team, but they could also be operating perhaps in a market that we don't think there's demand. There are other criteria we could look at, which is we want to see what we call a high pain point problem for an organization. And that is vague by purpose, but because for each industry, what does high pain point mean varies. So we're looking for a high pain point problem for a definable set of customers all having that problem. And this is where the founder needs to educate us on both 1 and 2. And then what qualitative or quantitative evidence do we have that high pain point problem for this particular ideal customer profile or segment of customers, that they'll actually do something about it, want to pay for it, and there is a market demand for what you're saying. So those are kind of the top 3 questions. And here we just love to hear from the founder their view on those 3 and validate that. And of course, as you're validating those top 3 questions about size of market, competition, go-to-market strategy, business, all of that, but that all feeds into, that's part of your thinking and you're answering those top three questions, I would say. But Geri probably have more to add, maybe.
No, I think that's a perfect overview, right? And it's the old cliche that at early stage you're investing in the founder. It's all about the founder. And for me, at least, what that means is that we are evaluating the founder's vision and their presentation of the opportunity. We're not looking at the founder as like a unique specimen, right? Did this person go to this school? Did they study that? Did they work at this company? That's not what's important. What's important is, how clearly do you understand this opportunity? How clearly do you understand your customer? How have you validated the market demand? We're trying to understand what you've done and what you've seen, and we're trying to determine whether what you're telling us is credible, right? That founder market that Mirit mentioned, that's usually what we're trying to gauge in the first 1 or 2 meetings. Then as we get more into the weeds on it, we're looking for that substance and that logic and that consistency between the qualitative and the quantitative. So when we pull up your financial model, does this reflect the vision that you laid out in your pitch deck when everything was perfect and shiny and rosy, right? Are there concrete steps that move you in that direction? When we introduce you to 3 or 4 prospective customers from our own network, does the feedback from those people reflect what you've told us about that being the right decision maker, this being a high pain point problem, and this being something that doesn't have a close alternative with existing market solutions? So I would say, the bulk of our process is really trying to understand holistically from all angles whether there is a big vision here and whether the way we see the world or this segment of the world is directionally aligned with what the founder is seeing.
Awesome. Yeah, I know that I'm like, as you're talking, I'm like thinking of one of my current clients, like how we're in the early stage, we're launching with different customers, and every time I'm talking to a customer, I'm actually like doing it's like an interview. It's time to learn, like, by the way, before we like do this pilot, can you tell me all the things that you're experiencing? Because that really is the only way to understand if this product is going to eventually be viable in that person's life. So yeah, I literally was like, okay, this is good. I'm doing that right now. Well, let's speak about customers really quickly, because I'm in obviously the world of customer success, and I why do I do this, right? Just for you all knowledge, like I do this because I really think a lot of times customer success leaders come into an organization and we're just like here to like fix problems. I mean, for better or worse, right? Because there is a retention problem, or there is some kind of a customer relationship issue, something that's happened. And this is even the case at the early stage. Like you come in, Series A, it's like, oh, we have 100 customers, but 50 of them are deciding to churn or something crazy. So what I like to do is say, hey, CS leader and CS people, like this is how helpful to educate ourselves about what are the external pressures that founder is facing, or what are the things that they are driven by, right? So being an investor, that might be one of the people that drives a lot of their decision making. But I'm curious on the investment side, like how do you see the role of customer success in the companies that you work with, or in the work that you maybe help them or enable them to do? Would love to kind of understand some of that.
Happy to take that one, and Geri probably has chime in as well. But I haven't mentioned, but most of my career, the 10 years of my career as I was an operator, it was in either go-to-market or customer success. So I have high bias towards the importance of customer success teams and the importance of it at the early stages. So I'll touch on it from 2 directions: the direction of how do we use customer success within Laconia, and how I'm thinking about customer success in the current role, and then also customer success from the founder side. So the way I see it, and again, I am deeply biased, customer success is about ensuring that your customers are seeing the values from your product consistently, which drives renewal, increasingly, which drives upsell, and enthusiastically, which drives referrals. So those are like the levels of how you can get your customers engaged with your product, and you have to do all of them. And actually, I am one of those that believe you have to think about customer success from day one, because if you do customer success right, you can reduce your cost of acquisition by having your customers refer you to other customers, and you don't need to spend too much time on BD, and you can have time, you can have kind of the money comes in organically from your kind of advisory board of customers and referrals programs and marketing with customers, etc. So I am extremely biased, and Gainsight is the people who have kind of put that in place many years ago, and there's books on the topics, but I definitely believe in it. And there are a few, we have a pre-seed company that just raised their seed, and they're immediately are doing the kind of customer success function and building it from the ground up, because they see the importance for their product of having that. So that's just like my spiel about the importance of customer success.
I love it. And I didn't even ask you to say any of that, which is amazing.
And there's never an early time to think about it, because basically you want your customers to love you and the rest will follow. I was thinking about customer success in the context of Laconia and my role as an investor. And the same applies here. As Geri said, she built a company with David and Jeffrey. They built a company from the ground up. So they're an operator. I feel like I am an operator too, because we're a small team of 4. So everyone is doing everything, and we're still building and scaling Laconia, and we're preparing for Fund 4. So we're continuing to scale and grow. So we are an operators who also have the fortunate luck of being able to deploy capital, which is super exciting. But our product is us and Laconia. And our customers are our founders, first and foremost, our investors, who are our LPs, who are entrusting their money in us, and also the ecosystem. So everything that we do is to think, how do I make sure that every activity that I do increases value in this product that is called Laconia, whether you're an investor, whether you're an LP, whether you're a founder, whether you're a co-investor. And I literally have in my head a customer life cycle for these people, because for an investor in the ecosystem to want to co-invest with us, or to want to work with us, or to want to refer founders to us, they need to get to know us, they need to see the value, and we kind of, so there's like a retention renewal also here in the way that you operate. And for founders to want to like working with us, and to want to build one company with us and then come back to us with another company, it's the same cycle. And LPs, again, to reamp and invest in you from Fund 1 to 2 and 3, it's all about that. So I think it was a very good question, and one that I haven't thought about it in that direction. But everything we do here is basically customer success.
I have to give credit for that to Sarah Ramonko, because she actually answered the question when I asked her about customer success of what she delivers for her portfolio and her founders. And I was like, that wasn't my question, but I actually think it is so relevant. And I love how you describe it, because what's really important there is, like, we often think of customer success for SaaS businesses, and we're starting to see that evolution outside of SaaS, which I love, because every business, no matter if you sell like sneakers or whatever, can benefit from outstanding customer experience, but also driving renewal, so to speak, like a second time buyer or a third time buyer or a forever buyer, right? So every type of business is actually seeing the application of customer success principles, which is exactly what you just kind of pointed out. So sounds like those playbooks, you should document those, because you probably could, you probably have something valuable there. I love that. Sorry, Geri, I didn't know if you wanted to chime in on that, but I had to just give credit to Sarah there.
That was just a perfect answer and a great demonstration of why we're so happy to have Mirit on our team. I guess just the one thought that sparked for me is, in venture, your feedback loops are so long, right? It's not like a SaaS business where you have usage and you have even an annual renewal, right? Or a biannual renewal if you have a 2-year contract. In venture, you have years, sometimes decades, before you actually know if what you're doing is working. But you do get compounding impact from the work that you've done and the partnerships that you've built and the founders you've backed and the LPs you've delivered returns for, et cetera, right? So even though you don't necessarily have the final result for a very long time, if you're in the industry long enough, you start to see how all of that compounds, and you start to see all different versions of it, where you have founders who you backed in Fund 1, who exited their company, who became LPs in the fund, who you backed in Fund 3, right? Like, we have examples of that. You have people who, intern with you, had a great time, moved to another firm, now sent an incredible company your way. So I guess for us, it's such a there's so much more variety in the way that it manifests than kind of traditional SaaS metrics. But it's absolutely the case that because we're in such an outlier-driven industry, the experience that you create for the people who you work with in various capacities ends up being critical to what ends up coming back around your way. So whether you have the path to attribution to it or not, it is real over time, and that value compounds. So it's something that we spend a lot of time thinking about, maybe in slightly different vocabulary on a day-to-day basis, but I do think a lot of the core principles are very similar.
Yeah. Outcomes matter, right? At the end of the day, the outcomes matter to everybody. Okay, so I want to take a few minutes and just talk about Venture Cooperative, because obviously that is how we met, and I still think it was such a valuable experience. I mean, I feel lucky because it doesn't feel like it's ended. Like it's going to keep going, and I feel like we've created this community for life. Obviously, meeting a lot of really interesting people, that is always, something I really enjoy. But the education that you guys have built, I think, is unique, and I would love to know sort of what was the like, how did it come about? What was the idea? Obviously you're taking a lot of time, you're taking a lot of energy and effort to build out the program in the very structured way that you have. I guess, where did it come about from? What is the goal, and what do you see as benefits even to Laconia, right? Because I think that is important to understand the whole cycle.
Absolutely. So before we started the Venture Cooperative, we used to run a very structured internship program year round. We would have 2 or 3 people who were paid interns on our team, helping us with everything from due diligence to file management, CRM updates, investment memos, collateral creation, anything and everything. And we reached a point where we were getting 400, 500, 600 applications per internship cycle. And it was, on the one hand, super encouraging, and on the other hand, it was infuriating because we could only hire 2 or 3 people, and then the rest we would kindly and gently and sadly reject. And 80% of those people would have been great in that role. Like, that's kind of the reality of it. And I thought it was nuts that there's really no engagement mechanism for so many people who are so eager to leverage their skill set and their expertise and their energy ultimately to help startup founders. So we started thinking about ways that we could actually scale up what we do. And there's so many things about venture capital that just don't scale, right? Like, what you do with a small fund and a small portfolio, you cannot do with $1 billion and hundreds of companies a year, right? It just doesn't translate. But there are elements of education that do. And so we thought, what if we can take out the actual work delivery element, right? So people are not required to do any work for us. There's no kind of labor element to it, but we can separate out all of the transparency and education and really distill the learnings that people would get if they did have the opportunity to spend a couple of months with us. So we kind of forked it. It was like, here's work, and then here's education, and then here is a platform that allows people to access this education at scale, build a community so that they have a peer group as they're going through this experience, and then ways that we can provide financial accessibility into the asset class. So whether it's waiving our investment minimum for fellows who have gone through the program so they can write their first LP check without taking on a tremendous amount of financial risk, or earn upside in our fund if they source an opportunity that we actually invest in. We wanted there to be an alignment of incentive and a sharing of the wealth creation in any capacity where the fellows have truly contributed something to Laconia's productivity. So that was really kind of the foundation of it. And what we've seen over time is that fellows have started their own funds, they've started companies, they've joined startups, some have gone on to work at portfolio companies, they've helped us with due diligence like you have, which we're so appreciative of. We've had fellows source companies that we've invested in. We've had some fellows who have come back and said, venture capital is really not what I thought it was at all. And thank you so much for teaching me all of this, because now I know that I don't want to do this at all. So not what I want to spend the next 5 years of my life working on. So I'm going to go do that instead. Like, great, you are now free from this recruiting cycle. So it's been really interesting to see what it has evolved into. And, for us, it's about creating opportunities that didn't necessarily exist before, right? The same way that with us, we had 500 applications for 2 roles. That happens on an industry-wide scale. At any given point in time, there's tens of thousands of people who are desperately trying to break into venture capital, and there's maybe 20 roles open in the US, right? Globally, you maybe have couple hundred, probably not. So this for us is a way to really open up the aperture, get more people involved in supporting companies. And then whether we lose the attribution or not, we know that this helps us be more visible to the founders and investors who are looking for us so they can find us. And it gives us a way to really make sure that we have enough market coverage to find the outliers that we're looking at in a more scalable, more accessible way.
Yeah, that's awesome. I love that. That's such a great, sorry, like, I mean, you covered all the possible answers. I think I think what you just said about somebody saying, "Oh, this is not for me." I'll say this, and I'm saying this on record now because I'm recording it. I am interested in investing myself because it is just I'm working with so many founders. I'm talking to so many people on a daily basis that if I think somebody's doing something cool, I want to possibly be an investor. But then I also recognize the work that goes into it, to be frank, right? When you kind of put that on center stage, I was like, oh boy. It's like it's not a light lift, right? But I also appreciate that because I think, and I recently talked to an investor, and he said, "Oh, venture is just finance now. Like it's a finance job, right?" And I was like thinking about it, and I'm like, there is a bit of like operations and intuition and all that, but to get it going, there's a good amount of financial like due diligence, right, that comes into play. So I will say it opened my eyes, and it also made me think like, hey, if I am ever going to do this, here's my boxes to check, so to speak, right? It gave me more insight, which I thought was really, really fantastic. So
it is amazing how much time VCs, especially early stage VCs, spend on insisting that they are not in the finance business. And I'm really sorry to break it to everyone, but it's a finance job at the end of the day. If it is not a finance job, you are doing something wrong. Like, don't tell your LPs that at the very minimum. The fact that there's a service element and a support element and a passion element does not remove the fact that you take other people's money and then you have to give back multiples of it. Like, that's the job. That's sort of the reality of it. But I think, your observation is spot on that there's a lot that goes into it. It's very involved, and there's so many different ways in how you can engage with founders and support founders and be involved in entrepreneurship. And I think it's great to kind of have that conversation and that sort of internal thinking around what are the things that I'm actually optimizing for, right? What is my goal? What are the qualitative things that I want out of my life personally and professionally? And what kind of role can I create or go after that will deliver all of those things? And even if you're really passionate about entrepreneurship, access to capital, innovation, diversity, inclusion, all of these things, like that may or may not point you to a venture capital investing job, and that's totally fine.
Mm-hmm. And it is I mean, this is like an awesome conversation. So we're going longer than I usually would, but I think it's also like eye-opening as I've talked to different people on this platform of different ways that you can invest. Like I think people see VC and they go, that's the only way that I want to do it. But there are other avenues. Like I know there are angel investment opportunities that, people can invest very low sums to start with and really get like their foot in the door of what is that experience like. And that has, to me been like, like at this stage of my life, like I'm running a business and trying to run a community and have young kids. I'm like, what is really important to me is time, right? So I'm like, but being like this idea of different types of investment philosophies is becoming more attractive, right? So, but I think without the education, it's hard to really understand them. And that's what I really do appreciate about the opportunity to go through the co-op and actually like go through it was like a mini course, right? Learning. And I've heard, I don't know what all the venture fellowships are like, so I wasn't really sure what to expect. So that was very valuable for me, and hopefully for others that are also looking to do things. But
and it's
yeah,
important to think about when you think about wealth creation, there are parts that some groups have been not part of over history of time, and now more and more predominantly underrepresented groups are opening up to wealth creations opportunities, whether it's through the alternative markets or whether it's through the public market. But even within the alternative markets, everyone now are becoming a bit more aware to being an angel investor but I would love to see us also moving to actually, like more and more being inclusive LP. Like you can be an LP in a fund, hopefully. We're working towards, decreasing the minimum needed, but also that's obviously tied into how many LPs you're allowed to have in a fund. But like it will be great. And there are platforms out there that are trying to help you become an LP in a fund, and then you don't need to know the behind the scene of running a fund. You're entrusting your money in a fund manager that manages it for you, and the LP has been reserved for a very particular type of person. And it will be great to see that LP persona changes with time. And I'm hoping that that's where we're headed to. Yeah.
Oh, that's awesome. That's a great insight because technically that's like the public market, right? Like if you're publicly traded, there's a lot more income disparity that you don't have to put in a ton of money to own some stock. But in the early stage, it has been kind of more segmented for the higher wealth group. So that's really great to hear. We'll keep on the lookout for that. If you guys know any people, send them my way. I'd love to chat with them that are doing things like that. Okay, well, just to, kind of head towards the end of this, I'd love to hear for you all advice for founders that might be looking to learn more about Laconia, you all and your work, that might want to get connected. And we'll put links and things in the notes as well. But any last sort of thoughts to share with them as we are wrapping up here?
Well, and how to get in touch with us. We are trying to be as accessible as possible, so you can just go to our website and apply directly there. We do review every form that comes through the inbound. We even invested in a company that came through us through an inbound. So we do take that seriously. We have the cohort deadline coming up. Anyone who's interested to learn more about the Venture Cooperative, Sunday, 9th of February 9 is the deadline. So still have time to submit applications if everyone is interested. And if not for this cohort, in case this episode runs after that, we have another one that later this year. So applications are on a rolling basis. And then if you want to get in touch with us, directly, we're on LinkedIn, and also I'm Mirit at laconiacapitalgroup.com.
I'm the same, Geri at laconiacapitalgroup.com. And we also have a ton of content that we create and put out there. So we have a guide for first-time fundraising that covers everything from how do you decide if venture capital is the right fit for your business to how to build a stellar deck. We have a playbook that takes you step by step through our entire investment process and our history. We're in the middle of a 10-year anniversary series, which is equal parts nostalgia and tactical firm building advice. So we try to share as much as we possibly can publicly. It's all on our website, all on our LinkedIn profiles for the co-op and for the Laconia account. So everything's out there. And of course, if something's not out there, as Mirit mentioned, you're always welcome to reach out to us directly.
Thank you both. This was such a very insightful session for me, and hopefully for those listening in. And I really do appreciate the time and just the openness to chat. I think that's been, you guys are just, even throughout the cooperative, I felt like, wow, just really like open sharing. And I think that helps so much with really like understanding the world that we live in today, right? And just understanding the world that you operate in today, I should say. So thank you both for that, and really enjoyed the time today. And for everyone, be sure to check out the show notes for more information, and look forward to the next chat. Take care.
Thank you for having us. This was fun, and we hope to see you again soon.